What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol AAPL for Apple Inc., of course. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. We've talked about the stock regularly on the channel, and the main thing to point out today is that we did structurally fill the gap overhead on the daily time frame, but look at the type of candle that was left behind today. Certainly a nasty, nasty inverted hammer, indicating that sellers were actually sitting there waiting at the gap close, and we closed relatively weak underneath the base of the FOMC sort of spike from back in here around 172.50. So to me, this is not the name to be fishing for longs in as of right now. If it was going to give us the dead cat bounce and we would have looked for more upside, we would have needed to close inside of the prior candle's range. It just simply didn't happen. So the two likely scenarios I think will unfold into the remainder of the week will either be a digestion bar in the midpoint, something like this, ultimately being daily bear flag consolidation like that, or continued breakdown into tomorrow's session, bringing us closer to 168 here inside of Apple. We know that that was prior highs here, highs, resistance, right, and then support from in here. So that's really the next structural element to be watching for on the daily time frame chart. Let's take a quick look through the lens of the 30-minute just to see what else we can learn about the price action today. Pretty, again, pretty ugly, the fact that we tried to make a stab at filling the gap and accepting up here, especially if you're watching like smaller time frames, 5-minute, 2-minute charts, and then it just all fell apart, right? So to me, really poor show of strength from the buyers here. Sellers still look to remain in control. We'll just confirm that with some Fibonacci analysis. We'll come in from the high of the day down to the, well, actually, let's do this the right way. Let me clean that up. Let's come back in with our fibs from the low of the open up to the high of the gap fill, right? And on the pullback, didn't even attempt to hold the 38.2, did not attempt to hold the 50%, did not attempt to hold the 61.8. It was really just downward from there. So instead, what we'll do this time is the other analysis, this time coming in from the highs down to the lows of the day here. And what you'll notice is, again, any sort of bounces around this 172.50 area, anything that's really underneath the 38.2 at 173, we know Apple likes nice round numbers, is ultimately fairly bearish inside of the stock, looking for bear flag consolidation, something that looks like this. We talked about the daily bear flag as well. That would be like the ultimate period or location of consolidation you don't want to see if you're bullish. Again, this would be lower price acceptance, looking for that rotation into 168. So that's what I'm seeing from the daily and intraday timeframes here on Apple. The only long trade in my estimation would be if we could clear some of this intraday resistance, notably these highs there. Let's go ahead and grab the other tool and put those in right around 174.30s. Okay, so if we can take that out, there's pretty emotional activity, not a whole lot of candle structure overhead. Maybe there's a move to the scene of the crime, as we call it, which would be closer to here. Let's just call it 178 as a round number. Again, you're asking a lot of a stock that already failed and put in such a nasty wick here, but if that breakout does occur, that would be the target and the levels to really be paying attention to. If you enjoyed today's video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.